Let's move ahead and decode the markets from the expert's lens. We have Dharmesh Shah joining in with us, Head Technical ICICI Director. Dharmesh, good afternoon. Mansi, this side, thank you so much for joining ET Now. And as we clearly see, it's all cheer in the Indian markets, be it the benchmarks as well as the broader markets, all the sectors in green as well, barring the media space. What's your technical view on the indices at present?
Yeah, good afternoon, Mansi. Yes, definitely. I think so the market started on very positive news after the news of ceasefire by US or Iran, Israel, and also supported by the falling crude oil prices. I think so that is something a big sentiment positive for the market. I believe I think so the biggest resistance for the Nifty for last 5 weeks was around 25,200. We have been consolidating in this 700 points. We expect I think so market to see a target of around 25,700 for Nifty the coming few weeks. So market likely to see 25,700 as a target. On the downside, we believe I think so 24,400 to 24,700 will act as a strong support for the Nifty. So any dip in market should be looked as a buying opportunity. So we remain to be constructive positive for the market. And again, I would say that the market bet, which is again a good indicator for the market, looks like I think so. There's a long way to go for the market because if you look at the mid caps and the small caps, we expect I think so the action should now see a catch up activity in mid caps and small caps. So it's clearly a buy on dip market for target of 25,700 for the Nifty.
Dip, that's the construct of the market right now. But Dharmesh, help us with your stock ideas as well, because given the up move, help us understand which are the stocks that you are eyeing at this point in time.
It's definitely, I think so. If you look at the current structure of the market, I think so. The way that things seems to be setting up, like you have a low inflation and the interest rate cuts. I think so. The biggest beneficiary to this is again a capex driven. I think so. The capital goods as a sector we remain to be constructive, positive for, and we expect. I think so. The gradual recovery is expected for capital goods because the sector itself has seen a good correction of around 35 to 40% from the top. So yes, capital inside the capital goods we remain to be constructive positive for L&T. L&T again, I think so. The stock has been witnessing a 5 months of falling trend line breakout, supported by strong volumes, and in the current corrective phase, the stock seems to be finding a strong support at 20-day EMA. So keeping all things together, we look, I think so, looking at the weekly as well as the monthly chart, it looks like L&T should be looking for a new high in the coming few days. So yes, L&T for target of 39.28, keeping a stop loss of 35.70, we remain to be positive for L&T.
Capital goods is the space one need to be watching out for, and in particular L&T is the stock which is on Dharmesh's radar. 3928 is the target which we anticipate for L&T. Dharmesh, thank you so much for your views on the market, your technical analysis as well as your stock specific recommendation. Thanks and have a nice day to you.